For most investors, investing in a hedge fund is far out of financial reach. Becoming an accredited investor, having accumulated significant investable assets, and being able to place a big, often risky bet is just out of reach. But what if you could have access to some of the tools that hedge funds use? Tools such as derivatives to help you reduce volatility and maintain positive returns regardless of market direction. What if you could have this in an easily accessible ETF? Liquid alternatives, or liquid alts, are alternative investment strategies that have been made recently available to Canadian investors. And Jean-Philippe Cadieux, product manager at National Bank Investments, is back with us today to discuss National Bank's new liquid alternatives ETF. Thank you for joining us again, Jean-Philippe.
Thank you for having me back.
Let's start with these hedge fund-like qualities. What are some of the differences between liquid alt ETFs and hedge funds?
Well, basically, I see two major differences. First difference would be accessibility, and second difference would be more related to regulation. So if I start with the first one, accessibility, our ETF trades on the stock exchange. You can come in and out on a daily basis. You want to buy at 9:35 and sell at 3. While it's not a good investment strategy, you technically can do it. You want to put only $500 in it, or you want to put $500,000 in it, you can do it. Hedge funds, you need to go through a lot of paperwork, give a commitment, put that money to work with the hedge fund. Then redemption can be really hard for quite some time. And a hedge fund will never take a small amount. As our ETF, whatever you want to put in, you can put in, no problem. Then on the second part, regulation, this is where it gets a little bit interesting. Liquid alts are really followed closely by the regulators. So part of the mutual fund regulation now enclose everything that touches liquid alts. While those hedge funds on the streets, they're normally outside of regulation. So there's a little bit of regulation on it, but not that much. So products like our liquid alternative ETF are subject to maximum leverage, maximum short position. It needs to be really careful on the liquidity of their portfolio, as on the other side, a hedge fund doesn't have to bother with all of that.
What kind of investor should consider liquid alts? And how might these products perform better than a do-it-yourself hedge approach?
So liquid alts, really, how we see it in NBI, liquid alts should really be used for diversification purposes, adding some decorrelation to your within your portfolio to a financial market, and making sure that it helps managing your risk, basically. So for an investor that wants to do it himself, it gets a little bit tricky, because how do you reduce risk in your portfolio? The easiest answer would be just to go cash, right? To sell some risky asset, whether bonds or equity, and just go cash. The issue with cash is you don't really get return. You're reducing your risk, but you don't get any real return out of that. Then you've got other options, such as going in real estate, infrastructure. Those are really, really popular for the last 2-3 years. I think it's the only valid option people had within their hands to play with and to hedge their portfolio in a certain way. Now liquid alts come in as a new added features that they can use to manage risk properly in their portfolio.
What are some of the alternative asset classes you will use, and what are they hedged against?
So in the NBI Liquid Alternative ETF, we're taking long and short positions in future markets on all type of asset classes. So currencies, fixed income, even some commodities. So commodities would be, for example, agricultural commodities, would be energy commodities and metals. And we could also use equity future markets, though right now the portfolio management team behind the strategy doesn't want to include equity due to the fact that it's highly correlated with the performance we see in the market. In the last 3-4 years, the only thing you had to do to have some good returns was to buy equity and close your eyes. So it does affect a little bit modeling on our side.
What are some of the future themes expected in the world of liquid alts? What new or alternative assets might be used to hedge in the future?
Well, we currently see right now in the market, long short equity, market neutral equity coming in. I suspect we'll see a lot of those in the next, call it 6 to 9 months. Then expecting to see probably some fixed income strategy. The new regulation gives them a really interesting approach where they could put a little bit of leverage in their existing fixed income strategy to pick up a little bit on the yield offered in those fixed income mandates. But what we need to keep in mind is the change of regulation. It's not a new product that we're creating. It's normally strategies and products that we were able to do for years and years now in the alternative world, that new regulation really gives a new distribution. So for retail investors, it's something new, but for institutional investor, it's mandates and investment strategy that they had access for years and years now. So that's something we need to keep in mind when we're thinking, this is a new strategy, I might leave it a little bit on the table, see how it goes for a couple of years. That strategy's probably been running a couple of years already, if the one you're looking at normally. Same thing for our own ETF, the NBI Liquid Alts. It's been running for 10 plus years internally for institutional clients. Now the regulation allows us to offer it to retail clients. What we could see in future developments, though, is the question, mutual fund or ETF? We're launching our liquid alt strategy in ETF. Competition is using mutual fund format. We think ETF is a great value added because it provides an additional form of transparency on the strategy. But that would be something really interesting to look at in the next, call it 12 to 18 months.
Well, thank you again for joining us, Jean-Philippe.
It's a pleasure.
For Morningstar, I'm Andrew Willis.